Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we will be discussing naked trading. Is this all you really need for trading? So what is naked trading? Well, it certainly isn't sitting in front of your screen in your underwear. It has only been since the advent of the internet that trading by technical analysis has really taken off. Before that, traders managed perfectly well without technical analysis. So how did they cope? Really good traders, including pit traders in the futures markets, they knew where prices of certain assets should be in their head. They waited for levels where futures contracts were oversold or overbought, and because they had a clear picture in their mind from past experience, they knew when to buy or sell. This was fairly similar in the early days of the Forex market. Currency exchange rates moved much more slowly than they do nowadays. Institutional Forex brokers would squawk prices to the banks and institutional clients who, again, pretty much knew the levels in their heads. Some traders would write the exchange rate price changes on a piece of A5 paper or a notebook, and they could then see by the changes if the price was moving up or down, what levels they had stalled at, and they would then trade accordingly. Nowadays, price action in a volatile market can be so fast moving it is almost difficult to keep up with it on a PC screen when using technical analysis. However, many profitable traders do not use lots of indicators on their charts. Some trade naked, relying on price action alone, just like the days before the internet really took off. They take advantage of price movement on their screens only to tell them when a currency pair is overbought or oversold, because essentially that's what it's all about. Markets are pushed as high as they can possibly go in one direction, and when they run out of steam because of a lack of buyers and sellers, they turn around and move in the opposite direction. These moves can sometimes be limited to just a few pips, and sometimes the moves are much larger. This depends on the time of day and also depends on the amount of market players, because the more traders that are in the market simultaneously, the greater the liquidity of the market. This also depends on things like fundamental reasons leading up to the economic data releases or market sentiment and forthcoming speeches by financial policy makers. Let's look at example A and try to gauge how naked traders operate. This is a 1-hour chart of the USD-JPY pair using only price action in the form of Japanese candlesticks to try and determine the future price action. On its own, we can see that prices generally bid from the beginning of the chart, which we always read from left to right because it tells us a story. Now let's look at example B, where we have just added a couple of horizontal lines which helps to give us a clearer picture of what's going on. Simply by adding two horizontal lines, we can see the price action on this particular pair centers around two levels, 109.00 and 110.00. Firstly, at position A, we can see a bullish candle which takes price just above the 109.0 level, only for price action to come down and be supported by position B by the 109 level. When traders could not push the pair any lower, price action begins to move up to the next key level at position C, which is the 110 level. Something we see quite often in the market is price action floating around key levels or round numbers, and that's exactly what happened here. Price action moved down to position D, but fades out because of a lack of sellers, and then moves up to position E before pushing above the 110 key level to around 1.1030. Here the market runs out of buyers, and the price action would appear to be gravitating back down to the 110 level again. Sometimes new traders rely on too many technical indicators, which means they're spending much time looking at them and cannot see the wood for the trees. Price action is king when trading Forex, so let it be your #1 priority during technical analysis. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.